banks, money market fund, insurance, and SACCO. These are 4 different things that you need to understand. Their meaning, the purpose, and why you need them. Every account here has its own benefits, and at a given time and when you need it. Now, let me make it clear. A bank was made, whoever came up with the banks were made for transactions. I think it's like M-Pesa. M-Pesa is also made for transactions, if I'm not wrong. It is money that you want to pay someone. There are some payments you cannot make without M-Pesa. There are some payments you cannot make without a bank. You understand? Like in some schools right now, you can't go there with the cash. You can't go there with an M-Pesa. You will only use a certain bank, but that they have designed for their payments. Now banks are made for payments, making transactional money. That money that you want to send somewhere, you want to pay it somewhere, that's the work of a bank. Banks are not investments. They are not the best for savings. But over the years, I think we have always believed that the best way to save is through the bank. Banks earn you nothing. And also at some point, let's say you have saved with a bank on locked saving. Locked savings, they promise you a certain percentage, a certain amount of money that they will give you. But in case you fail to maintain the agreement, I think they punish you, or you will lose that investment, that interest that you are to get from this money. You understand? Number 2, now we are going to MMF, money market fund, the mutual fund, the fund. Now, MMF is let's say it's an investment now. Let's say it's an investment, but also a parking for your money. It's just a place to put your money. It's like parking your car somewhere, then tomorrow you get your car washed, and also maybe sometimes the tires maintained or all that. Let's say someone washed your car overnight at a parking that you don't pay for. You understand? You find your car plus some add-ons, something on top. This is what we mean by money market fund. Money market funds will give you something on top. They will take your money, invest it. Let's talk of how they make money. Money market fund make money through your own money. They invest it somewhere. They invest it with someone. They lend someone. They give it to someone to solve his own problem, but the person will bring it back with something in return. But they don't eat everything. They give you something back as an investor, as the owner of the money. This investment does not need even your presence, just your money, and you relax. And most of these investments, you can even withdraw when you want, anytime, and you will receive immediately. And some of them will go like, 48 hours, something like that. But these are investments that they don't need your presence. Let's go to how banks make their money. Because even bank is someone's investment. It's an investment somewhere. So even banks, they need that money. They invest. The moment you save your money there, a bank will lend it just the same way MMF will do. Money market fund will do. But banks will give you nothing. So you are the one to choose. Which one do you want? I think, according to me, you may need a bank to pay something, but MMF to park your money for maybe a plan for the longer investment. Long-term investment. Maybe you are planning to build yourself a house, to buy yourself a car, to buy anything that you want to invest in, or anything that you want to buy. But since you don't have that money in one bucket, you will have to save it slowly. With the time, you will find yourself with the old money and buy what you want. Now with MMF, they will have your money, but also give you something, a compounding interest. So that means, with the compounding means, every day that money grows, meaning you can withdraw with the small amount that they have added on top, with the amount that they have added on top. Anytime you will just withdraw your money and buy what you want. Different from the bank that will lend people your money and take everything for themselves. You understand? Banks will take everything for themselves, but MMF will give you something, and they remain with the other amount because they have also invested there. that's their investment. So they will look for the low risk. Now, next time we will check on both investments and the risk involved. How risky? What's the risk of investing in a money market fund, and what's the risk of saving in a bank? A bank is a saving. MMF is like an investment, a parking, as you plan for the longer term of your investment, as you go deeper into your investment, as you grow yourself. Now let's go to a SACCO. A SACCO was also made for. SACCO was like a chama, was meant like a chama. It's something like a chama. SACCOs were made by members when the banks were the only way of like saving. But their terms and conditions on lending their customers were very stiff, very strong, and very tough, that not every human being could reach their terms. It was not easy to access a loan with the bank. So the members of the public joined hands together to build their own way of getting loans in a soft way, in a low interest rates, and also in a better way, in a simple way, with the simple terms, you understand, and also a low interest rate. And like the banks, those days, they used to have that high interest rates and also tough conditions, unless you were someone, the big fish in the country. They used to give it to the bigger names and corporates. Those were the only people who could get these things in a simple terms. I think like the bigger companies, those were the people who could access loans from the bank. So the members of the public came up with a solution for themselves. That's why in a SACCO, you are a member, you are not a customer. As a member, when the company makes a certain income, a certain profit in a year, they give you something like called a dividend, because you are a member, you are not a customer. So they give you something in return as a member. Then it's like they contribute, they divide the profit among their members. It's a dividend. They divide it among their members with a certain percentage. They give it out at a certain percentage to their members, and they add that money to your portfolio. Now, having a bank, a SACCO, and also a money market fund. Now you need to understand few things. Banks were made for transactions. So if you have money to transact, maybe you want to pay your rent, school fees, and all that, bank is everything. MMF, if you have an investment that need your money, need your kamchango, you want to pay it with the time. You want to save this money with the time as it grows. Money market fund is the best place to be. Now, if you need something like a loan, let's say you are saving to have something like a loan. You want a loan to build your house, buy yourself a car, invest somewhere and all that. My friend, Sacco is your only home. Only hope, only place. Lower interest, lower terms and condition, and sometimes they don't even need guarantors in some cases. So that's the only place you can be. Guys, this is my YouTube channel, guys. Subscribe to my channel, support my channel, Maze. Let's grow together. Let's grow this channel. Let's talk ideas. Let's change what needs to be changed. Thank you. Now, insurance. Insurance, I think insurance is an investment. They invest on your risk. It's a way of keeping you on top, on where you are after you end up facing a certain risk or a certain problem within your business. Like cars, the moment you get an accident and you lose the whole car, but you are still alive. And even if you die, I think you will be paid. The family will be paid. They keep the family on the move. They give you back something to start with. So you will, with an insurance, you will not lose everything. You understand? Now, how does insurance companies make their money? How do they make their money? They make their money if you don't get a risk. If you don't get that your problem. So they bank on your problem. If you don't get a problem, they have their money. Insurance, like let's say you are sick. The moment you are sick, the insurance company will bring you back. Even if you don't have that money, they will pay for your bill. If you die, the insurance company will keep your family moving. If you run low on cash, but your son or your daughter is joining a university, an insurance, the moment, if you had an insurance cover, the company will cover the whole of his academic, whatever, all his schooling bills and all that. The insurance will take. So insurance, they bank, they invest on your risk. You know, every problem is an opportunity to someone else behind you. Everything you do is an investment to someone. So this is how insurance companies work. Banks were made for transactional. Sacco were made for lending in a better way, in a simple way, and also simple terms and low returns, low interest rates. You understand? MMF is a parking for your money. Somewhere, a place you put your money just for your money to grow. It grows as you plan on what to do with it. Thank you.